The AI revolution is in full swing, and almost every tech giant is rushing to the top. The Magnificent Seven alone allocated hundreds of billions of dollars to accelerate their expansion within the AI space. Now, this begs the question, is your portfolio ready to capitalize on the AI gold rush? Hi, my name is Rick Orford, and I help investors like you make informed decisions with your money. While I'm not a financial advisor, I have been trading stocks and options since 1999, and that means I've seen pretty much all of the ups and downs that have occurred in between. And if experience has taught me one thing, investing in stocks works really well when you focus on companies with solid foundations. By the way, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insights and stock recommendations for investors of all skill sets and risk levels. And y'all know how much I love researching new stocks and finding the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times, and you can scan this QR code or visit fool.com/RickO to get your 10 stock picks right now. Right now, Palantir and IBM are some of the most talked about tech companies with massive growth potential from AI advancements. One is a talk of the town within Wall Street, while the other is a century-old pioneer. But if you're going to invest in one or the other, would you choose Palantir or IBM? Well, to answer that question, let's have a look at both of the companies' recent performance. Palantir Technologies is a massive data analytics company that's known to be working closely with the United States government. But in recent years, the company expanded to commercial sectors, offering specialized software solutions to businesses around the world. And that includes AI solutions. Of course, you guessed it. So far, 2025 has been an incredible year for Palantir. In the first quarter, the company's revenue increased by 39% year over year to almost $885 million, while operating income increased by a whopping 117%. Its net income also increased by over 100% to $214 million, putting Palantir's quarterly EPS at 9 cents a share. However, what really caught investors' attention was the 71% surge from the commercial space and the 45% growth in government sales. In the US market alone, Palantir's revenue shot up 55% to $628 million. From this momentum, the company raised its full-year revenue expectations to around $3.9 billion. And I think the US stock market echoes the same sentiments. Since the beginning of the year, Palantir's stock has increased by over 60%, while most tech companies took a hit from all of the macroeconomic and geopolitical headwinds that have happened lately. But what exactly is driving the company's performance? Well, for starters, Palantir is an established defense and intelligence contractor of the US government. And these US government contracts are the primary growth driver for the company right now. Last November, Palantir secured a billion-dollar contract with the US Navy, and more recently, NATO signed a deal with Palantir acquiring the Maven Smart System. And of course, if this partnership goes well, I wouldn't be surprised if we saw the Maven system deployed to other NATO countries. Even government agencies outside the defense circle are partnering with Palantir. In fact, ICE, or the Immigration and Customs Enforcement, is paying the company $30 million to develop a software called Immigration OS, which basically gives the agency an almost real-time visibility on people who are self-deporting themselves from the United States. Beyond government errands, Palantir is also successful in its expansion within the commercial sectors. Although it's not yet as profitable as its government contracts are, the company's Foundry and AIP segments are gaining momentum from Fortune 500 companies who are looking to harness the potential of their data through AI integration. Now, going back, IBM, on the other hand, may not generate as much excitement as Palantir, but 2025 so far is also very solid for the company. Its revenue for the first quarter mildly increased 0.5% year over year to $14.5 billion. And that's way higher than Palantir's revenue in terms of dollar values. But it fell short in terms of growth rate. And IBM's operating profit also increased by nearly 23% to $1.2 billion for the same period. By the way, the data used in this analysis is powered by bar chart, which lets you screen and filter thousands of tickers by price, volume, sector, and more. So you can find data on pretty much any company in seconds, and you can scan this QR code or click the link in the description to create your free account. IBM has been around for more than 100 years, and near-term explosive growth isn't something that you'd expect perhaps from a mature company. So personally, the gap doesn't really make IBM a bad investment choice on its own. However, IBM's net income is down around 34% to $1 billion, which is because of the lower overall income from continuous operations. And this resulted in an EPS of $1.60 for the quarter, and it might be a bit lower compared to the first quarter of 2024, but it still outpaced estimates by almost 13%. And that's for the quarter. IBM's annual financials paint a much different picture. Although there's not many positive changes when comparing 2024 against 23, if we go back to 2020, well, we can see just how much the company's financials have improved over the years, and I think that's one of the main selling points of mature tech companies like IBM. Speaking of selling points, many investors bought IBM stock because of its dividends. Right now, the company's forward dividend is $6.72 per share per year, which is $1.68 on a quarterly basis, and that translates to a forward yield of around 2.5%. It's not the highest in the market, but I'm convinced that investors are after IBM's stability with gradual dividend growth. Also, IBM's stock performance is quite impressive when compared with the broader tech sector. At the time of the recording, the S&P information technology sector is down by almost 4% year to date, with many wild swings in between. On the other hand, IBM's share price has increased over 17% since the beginning of the year, hitting a new 52-week high of around $260 a share. And that's an impressive resurgence from its 52-week low of $163. And remember, all of this happens during extremely volatile markets. I guess it really pays to invest in well-established companies. And I think it's only right to give credit to IBM CEO Arvind Krishna. Under his leadership, IBM is gradually transforming into a hybrid cloud and AI company, offering specialized solutions to businesses around the world. It's a bit similar to Palantir, except IBM has an existing and much bigger customer base. To turn vision into reality, IBM acquired HashiCorp, and this acquisition gives access to the automations and security needed for its hybrid cloud applications. And to top it off, IBM also recently acquired Hedoka, its huge data and AI consultancy company. And it's to improve IBM's capabilities in developing AI solutions across different industries. During IBM's Think 2025 conference, their CEO stated that the era of AI experimentation is over, which means IBM is switching its focus from trial and error to actually being able to deliverable, measurable business results through AI integration. There can be plenty of analysis and discussions between the two companies. I even get a lot of questions about this in my Discord channel. But I think the investment decision boils down to one thing. Do you pick stable income or explosive growth? Well, let me break it down for you. Right now, it's very clear that Palantir stock offers more growth potential than IBM. The company is expanding rapidly. It has billion-dollar contracts with government agencies, and more importantly, Palantir's AI and data analytics capabilities position the company to capitalize on the AI gold rush. However, all of this comes with a price, literally. Its trailing 12-month PE ratio is currently at 1,067x, with a forward PE of almost 350. To put this into perspective, that's almost 45 times higher than the sector average of 23.77. Generally, these numbers would mean that Palantir stock is way overvalued, just like Tesla perhaps. And this usually happens when a stock is filled with emotionally driven investors. They go in all in without looking at the actual fundamentals because they feel like the stock could increase sometime soon. That said, I honestly don't think that the traditional measurements like PE are appropriate for Palantir right now. I mean, you don't normally value a relatively new, high growth company with a PE ratio. Otherwise, you'd miss all the potential upside once the heat starts to cool down. On the other hand, IBM offers a much more conservative option. Although it's a century-old company, it continually innovates with new technologies coming out and competes with all of the young guns within the AI space. So with IBM, you can't really expect an explosive near-term price appreciation from the company right now, but you would expect long-term stable cash flow from its dividend of about 2.5%. Also, its valuation is quite reasonable at around 25 times trailing earnings, not very far away from the sector's 23.77x. And yes, you can use PE on IBM because it's already a well-established company, which means it's so much easier to understand its valuation compared with Palantir. Personally, I think having them both in an investment portfolio is the best option, and I think many of you would agree, wouldn't you? However, if I were only allowed to choose one, I'd probably go with IBM only because of its long-term income potential. Hear me out. I'm an income investor, so naturally I'd prefer a company that offers stable dividends and a proven track record. And I always invest for the long haul. Think 5, 7, 10 years down the road. So if we're on the same boat, choosing IBM to me would make more sense. That said, I totally understand it. If you're an investor looking for explosive growth potential, well, Palantir is a no-brainer among the two. If IBM stock is the Mini Cooper, Palantir is basically a Lamborghini. So that's my take on Palantir and IBM, but what do you think about the two companies? Are you an investor in either of them? Let me know in the comments below. And of course, if you found this analysis helpful, don't forget to hit that like and subscribe button for more investment analysis. Thank you so much for watching, and I'll see you in the next video.